Hi there and welcome back. In the last video, I showed houses that are under $1 million west of Yonge. In this video, what I want to share with you are examples of freehold properties. So again, detached, semi-detached, and townhomes, no condos, that are east of Yonge. So these are opportunities for potential buyers, whether you're a first-time buyer or a real estate investor, if they have 2 units, to get in the city of Toronto for under $1 million. The data I'll be sharing with you is based on sales that have happened in the last 30 to 45 days. So this is recent data at the time of recording, which is November 2023. Obviously, with the affordability being at an all-time low because of interest rates are at the highest level since, I'd say, about 23, 24 years, I believe the data is showing. And that has pushed housing affordability at an all-time low. On the flip side, it has increased rent to an all-time high because the demand, people need housing, whether they buy or they rent, because they can't afford, I should say, they can't qualify to buy a home. They are pushed into the rental market. Keeping in mind that the 5-year fixed mortgage rates are hovering around the 6 percentage points, the Bank of Canada benchmark rate is 5%, which puts variable mortgages around 7%. So it makes it very difficult for potential buyers to buy their home. Move-up buyers, it makes it difficult for them to sell because there's less demand, and obviously makes it difficult for them to buy their next home. It just slows down the whole market. Before I get into the examples that I have prepared for you in this video, my name is Nawar Naji. I'm a real estate broker in the city of Toronto. If you can give this video a like and subscribe, that would be greatly appreciated. And if you ever feel like reaching out to discuss your personal situation, whether you're buying, selling, your first home, your investment property, feel free to reach out. There's a link at the bottom of this video where you can click book a call, and I look forward to connecting with you. Okay, so before I get into I've actually set up 5 examples. So 2 detached houses, 2 semi-detached houses, and 1 townhome east of Yonge. This is an overview map which I shared in the West of Yonge video of the City of Toronto, broken up into sections per the Toronto Regional Real Estate Board. And to simplify things, you have the central section, the west section, and the east section. For the east section, it pretty much starts at the DVP. So anything east of the Don Valley Parkway is considered the east region. And for the west, pretty much everything west of Dufferin. It does zigzag a bit, but pretty much west of Dufferin is the west side of the city of Toronto. So in this video, I'm going to show you 5 properties that sold in the last 45 days under $1 million that are not condos, as examples of what's available in the marketplace today. Here's the first one. This is a detached house in the Danforth and Main area. So this is good because if you look at the city of Toronto, Danforth, Main, you have obviously the Bloor subway line. There's the GO train there that goes straight to Union Station. So transit is key. This is very good, attractive feature. It's a 2-story detached on a 17 frontage by 117. It sold around the mid-900s, and again, because of privacy laws, I cannot disclose the exact address and the exact price, but it gives you an indication of what's happening in that pocket. Mid-900s for a detached house. Move-in ready. So all the examples that I'm showing today are move-in ready. There's no renovations, no gut jobs. Bring your furniture and you're good to go. So this one's got 3 bedrooms, unfinished basement, and 1 bathroom is the trade-off. So that is a potential work to be done in the future, is to finish that basement and add a bathroom, add a bedroom. But it's move-in ready on the main and upper floor. You have 3 bedrooms and 1 washrooms, and a potential to grow into that basement moving forward. The next one here is another detached house. I went a little bit east, I should say, Eglinton and Brimley. And again, Eglinton, so you got the LRT. Whenever that finishes, hopefully sooner than later, it's a bungalow that is sitting on a 51 frontage by 152. So you can see that as we move a little bit further east, a little bit further out of the core, these lots get bigger. You have more land to buy and to move into. So in this case, it's 51 by 150. It's a bungalow. It's sold just under $1 million. Again, move-in ready. This one has 3 bedrooms on the main floor and 3 downstairs with a separate entrance. So The setup to me looks like a good potential investment property where obviously you have 3 bedrooms rented on the main, and then the downstairs you can rent those 3 bedrooms as well. Now moving to the semi-detached properties, we're moving back closer to the core, not quite the core, but this example is Riverdale. So just north around the Bloor area, we'll just call it Bloor area, east of the DVP. It's a 15 by 100 semi-detached, sold just under $1 million, beautifully renovated. The pictures interior is just gorgeous. And it's a move-in ready 3-bedroom, finished basement with 2 bathrooms. So this is perfect for move-up buyers coming out of the condo space. So if you live in a condo in the Canary District, in the Distillery District, somewhere on the east side, and as you move up through the home ownership ladder, people tend to move to areas they know and they're familiar with. So it makes sense. And actually I've seen quite a few number of clients who move from those pockets of Distillery, Regent Park, as well as the Canary District, move to that Leslieville area where they still live in the city, you still have access to transit, you still walk down the street to get your coffee, local butcher shop and all those independent stores, and you can get a freehold house for under $1 million, no condo fees, in the city of Toronto. This one's another example, semi-detached in Leslieville, so a little bit more south. It's a 20 by 79, not a very deep plot. It's move-in ready. This was, or is, still is, a 2-bedroom house with a finished basement and 1 bathroom. So there's a bit of a trade-off here. You went to less number of bedrooms, 2 instead of 3 in the previous example, but it is a wider frontage on a 20 versus the first one, which was 15, but not as a deep of a lot. But again, it's move-in ready, it's sold in the mid-900s, and it's in Leslieville. So again, local shops, transit, city, parks, you know, all that good stuff and the benefits of living in the city of Toronto. This is a townhome in Leslieville as well. So I'm keeping it as close to the central areas as possible. It's a 16 frontage, which is pretty good because if you've watched my West of Yonge video, when you have a house that is, 60 might not sound very wide, but because you're attached on both sides, your interior is pretty wide. So when you walk in, you will see and feel how wide the house is, regardless of the fact that the frontage is 16 foot wide. It's 75 deep, so not a very deep house, but that's urban living. This one sold just under $1 million. It's move-in ready, 2-bedroom and 2-bathroom with a finished basement. So the trade-off is you have 2 bedrooms instead of 3 bedrooms if that's what you're looking for as a potential buyer, but it's right in Leslieville, beautifully renovated, move-in ready, and it's up for taking. So good for that buyer. Here's my take on how to position yourself and who can benefit from this current environment. Now, fact, interest rates are all-time high. It is difficult to qualify. It's difficult to afford. There's no question. There's nothing to question there. However, I think we're at the peak. I think we're there, maybe a quarter point more increase. Again, at the time of recording, which is November 2023, it feels like we're at the top per the statements coming out of the Bank of Canada and the US Federal Reserve. Time will tell. So if we're at the peak or almost at the peak, things should come down. It looks like the economy is slowing down based on GDP numbers. The opportunity here is for first-time buyers. And again, I preface this with as long as you qualify and you can afford it. This is not pushing people into the market. You have to be in a good financial position. But here's the opportunity. If you're a first-time buyer or a real estate investor, if some of those properties have two suites where you can rent the main and upper if it's a 2-story in the basement, so you got 2 like a duplex, so you have 2 units of rental income because rents are so high. I believe those two cohorts can benefit, the first-time buyers and real estate investors, as long as, one, they are financially in a good position and they can qualify and can afford the mortgage payments and the finances. 2 is if they have a short-term approach when it comes to financing. Talking to the mortgage brokers and the people in the finance industry, rates, who knows, it's a prediction, but they believe that we're pretty much at the peak. We should start coming down late 2024, early 2025. And if we're at the peak and things are coming down, this is where it's prudent to position yourself in a shorter term type of financing. So you can go 1 year fixed, you can go maybe 2 year fixed if you want, or you can go variable, because with the 1 year and the 2 year, obviously you can renew and restructure the financing when the rates come down to a lower cost product. And with respect to the variable, you can break that mortgage at any time with 3-month interest penalty. Anything longer, once you get into 3, 4, 5 year fixed, you have to be careful with the interest rate differential penalty, which could be significant and in the tens of thousands of dollars. So the finance and the mortgage people that I've been talking to, stay away from those products, go short or go variable. Now, if you're a first-time buyer or real estate investor or a move-up buyer, there could be an opportunity, because sure, you might not get the highest price for whatever you're selling. So if you're coming out of the condo space, you might not get the maximum price that you could have gotten a year and a half, 2 years ago. You might get a little bit less, but because you're buying the bigger asset, so if you're buying a more expensive home, if you're moving up to a larger home, you can buy that larger home at a bigger discount. So the discount on the larger purchase will offset that potential that you could have gotten had you sold your condo or your existing home back in 2021 or early 2022. Anyways, everyone's scenario is unique and different. And you know what? Feel free to reach out. There's a book call down in the link below this video. I'd be more than happy to chat with you. No obligations, no pressure. We can chat, look at the numbers, see what makes sense, what doesn't make sense, and you got nothing to lose. I will also link the video for west of Yonge in the description below. And finally, please make sure you subscribe and give this video a like, and I'll see you on the next one.